People have no idea that they can actually acquire physical gold, physical silver, platinum. They have no idea, where cash is eventually going to go. People just don't know. They're completely naive to the fact that they can own this stuff themselves, that they can buy this stuff themselves. I've shown people pieces of silver, and they look at it. You mean that's a real piece of silver? I'm like, yeah, that's a real piece of silver. They don't. Oh wow, and they touch it, and they're like, wow, this is. I don't know about you, and when you touch that, there's something about silver and real gold. When you just hold it in your hand, I don't know, it's magical to me. I'm telling you, I'm like, this is where it's at. You can feel it in your bones. I don't know another way to say it.
Gold prices surged to a 6-month high on Monday, driven by a weakening U.S. dollar and growing anticipation of the Federal Reserve halting its interest rate hikes. The U.S. economy's consistent signs of a slowdown amplify the potential for interest rate cuts, subsequently dragging down the U.S. dollar index, DXY. Present market sentiment indicates a 25% likelihood that the Federal Reserve might initiate rate reductions in March 2024, a probability that could climb to 45% by May. Influenced by recent economic data, the softened U.S. dollar is a pivotal force behind gold's ascent. The forthcoming U.S. economic releases, especially concerning growth and inflation, can further impact and stabilize gold's position above the $2,000 mark. Meanwhile, in late October 2023, silver traded at approximately $23.68 per ounce after a remarkable few weeks, boasting a growth of roughly 20% from the same period in 2022. This exemplifies the resilience of gold and silver bullion as safe haven assets, preserving their value during economic instability. Market trader Gregory Mannarino passionately advocates for the often overlooked value of physical assets such as gold and silver. He finds it astonishing how many remain unaware of the potential to own these tangible forms of wealth. This divide is stark, those recognizing the investment potential in physical assets versus those relying on conventional advice from brokers and financial institutions. Gregory highlights the disparity in guidance, where brokers, motivated by their self-interests, predominantly promote stocks or ETFs, neglecting the promising investment avenue of precious metals. Acknowledging the current high-risk state of the market, Gregory refers to the Market Risk Indicator, MRI, and the Federal Reserve's efforts to stabilize the debt market. Yet he cautions against short-term thinking, urging a focus on the long term. Gregory foresees a looming systemic breakdown orchestrated by central banks and expresses deep concerns about the intentional dismantling of the existing financial system, with banks consolidating power meticulously rather than incidentally. We will present clips from Gregory Mannarino's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Astonishing concept. Most people have no idea that they can actually acquire physical gold, physical silver, platinum. They have no idea. They're like, well, you mean to tell me I can actually buy this stuff? I can have it delivered to my house if I want to? Yeah. 9 out of 10 people have no idea that you can do that. That's, we, people like you and me and the people that follow our work, I mean, we're definitely in, I think, a different tier here, on understanding, where cash is eventually going to go. People just don't know. They're completely naive to the fact that they can own this stuff themselves, that they can buy this stuff themselves. I've shown people pieces of silver, and they look at it. You mean that's a real piece of silver? I'm like, yeah, that's a real piece of silver. They don't. Oh wow, and they touch it, and they're like, wow, this is. I don't know about you, and when you touch that, there's something about silver and real gold. When you just hold it in your hand, I don't know, it's magical to me. I'm telling you, I'm like, this is where it's at. You can feel it in your bones. I don't know another way to say it. Anyway, but more people are going to wake up because, again, look, you call a brokerage and ask them where you should be putting cash. Are they going to tell you should put into gold or silver? Heck no. They're going to tell you need to buy stock or ETF XYZ because they make money off of the transaction. But they're not going to tell people that's where they need to put in their money. And, it's up to us people to figure it out, unfortunately. But I think you and me, and there's a lot of other people out here have been doing a heck of a job over the years trying to inform the public. People think their market's risky. It is. Risk in this market right now, based on my own indicator, the MMRI, is at a very high level. We just dropped out of an extreme risk situation here after Powell here kind of paused again and is now the Fed's obviously buying more debt, weakening the dollar. That's reflected in the MMRI. Anyway, risk in this market right now, I think the Fed's going to manage it, and I think we can see the illusion of stability in the debt market being maintained, and that is going to drive cash into the stock market. Now, I'm telling people that I'm buying the market, but that doesn't necessarily mean they should be doing that. I think it's always prudent for people to focus on the longer term, understanding that this whole thing is going to come apart, and I mean come apart. On a scale that I think even me, and I study this stuff all the time, it's going to be more so than anyone can imagine as this thing starts to break down. And they're already dismantling the system, in my view. The banks are part of the system that they're pulling apart right now, consolidating power. Everything that they've set out to do, these central banks, is happening here. Nothing is by accident. It's all 100% deliberate. It's all going to plan how they have thought this out. You almost have to tip your hat to these institutions because they really have the world where they want them right now. They control the economy, the financial system, the financial markets, the price action of pretty much every single asset right now. But that doesn't mean there is an opportunity. But longer term, I can't imagine a better place to be than in a risk-off assets here, because right now the environment is clearly risk-on. Risk-on meaning the Fed deliberately driving cash into the stock market. Other central banks are doing the same thing as well. Eventually, risk-on is going to turn risk-off. It's just going to flip the other way, and assets like gold and silver and commodities and stuff, they're going to skyrocket.
The recent surge in interest rates by the Federal Reserve has heightened the vulnerability of the U.S. banking system, leaving a significant number of institutions susceptible to potential failures in the event of a bank run by uninsured depositors. Silicon Valley Bank's recent collapse has reverberated across the financial sector, marking it the second-largest bank failure in U.S. history. Gregory staunchly maintains that the challenges confronting these banks are escalating rapidly. He points to the mounting debt these institutions carry, which yields minimal returns, consequently eroding their balance sheet values considerably. A report from the Federal Reserve Bank of New York, released on Tuesday, highlighted a concerning trend. According to their quarterly report, overall debt levels increased by 1.3% in the third quarter, reaching $17.29 trillion. Of particular note was the 4.7% rise in credit card borrowing levels, now totaling $1.08 trillion. Given these worrisome developments and a rather bleak outlook, Gregory advises individuals to consider entering the market, suggesting that the current scenario might present an opportune moment to capitalize on potential actions anticipated by the Federal Reserve. Let's get back to the interview.
I started to warn people over a year ago that there were problems here with the banks with regard to no loans, no deals, and no deposits. And, it's just an incredible situation we have here. What I believe is going on is a consolidation of the system. We watched the regional bank issue, which has not gone away. The large banks are facing the same problems here. What people are not being told, and is going on right now, is capital withdrawals from these institutions. These are at record highs. We've never seen anything like this before. Not only are there no deposits anymore, but people are literally pulling their cash out. I don't know what people are doing with it. Maybe they're doing what our grandparents did. I don't know about you, but my grandparents actually hid cash in the house. They lived during the Great Depression. They didn't trust the banks. I don't think anyone should trust the banks. I think, honestly, that the issues facing the banks is getting worse, faster. How do we know that? We just found out. I mean, this is just today. Existing home sales crater. They got prior month got revised lower. I mean, this is a big deal. Not only that, there's multiple factors going on here. You got these. Let's talk about the number one issue. Well, maybe it's number one, but I think it's a huge issue. These institutions, and you're well aware of this as well, have loaded up on debt that is yielding nothing in this environment where bond yields are rising. That has caused their balance sheet's value to evaporate. And this is a big part, in my opinion, as to why the Federal Reserve is buying more debt right now, trying to keep rates suppressed and maintaining that illusion of stability in the debt market. That's how this whole thing ties together here. Look, what do we know is happening? We have nations like China, a lot of nations now dumping U.S. debt. Who's buying it? There's always a buyer and there's a seller. I mean, obviously we know who's behind the debt here. And that mechanism is going to continue, in my opinion. And I think it's going to get, in fact, I did a video about it this morning. I think this, there's actually no doubt in my mind whatsoever that moving into next year, we're going to see a debt buying spree, not just a debt buying spree, a dollar dumping spree by the Federal Reserve. All central banks manipulate their currency. Everyone knows this. Okay, this should be common knowledge. How central banks manipulate their currency is, let's say, for example, they want to keep their own currency weak, which is what the Fed wants to do right now after a crazy run up higher in the dollar, is they're dumping dollars and they're buying foreign currencies. This is, you can just see this in the way the markets are playing out. So what's going on here is pretty clear. Let's go back to the banks real quick. All kinds of trouble here for the banks, and it's not getting any better. And I'll tell you something that bothers me more than anything else. You probably heard me say this. So the FDIC knows there are hundreds, maybe even thousands of banks that are going to fail. We're not allowed to know it. It's above our pay grade. No one is allowed to know which banks are failing. And I think, again, they're consolidating the banks here. They're going to allow some banks to survive and some banks to go down. I think I did a whole piece on Bank of America. I think Bank of America is the worst off of the big Wall Street banks right now, looking at multiple factors. I think people need to pull their cash out of these institutions. I've been telling people to do this for the longest time. And where would they put their cash? People always ask me that. If you have to keep your cash in a bank, understanding the situation here with debt defaults skyrocketing across the board, people can't pay their bills, home sales cratering, no deposits, loans, forget about deposits, people withdrawing their deposits. I think there's a silent bank run going on here. I also think, and may sound crazy, but I think people need exposure to the market. Take advantage of what the Fed's going to do. I am buying more of this market. So I think they're going to keep propping this up. I want to take advantage of that until it runs out. As long as they can keep risk at bay, and look what they're doing here with the 10-year yield, week-to-week dollar, this opens up a doorway for cash to make its way into the stock market.
The outlook for gold and silver appears optimistic in the near future. With the U.S. economy signaling a slowdown and the potential for interest rate cuts by the Federal Reserve, the value of these precious metals is expected to continue climbing. What are your thoughts on the future price movements for gold and silver? Share your observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.